Ladies and gentlemen, good day and welcome to SARDA Energy and Minerals Limited Q2 FY21 conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pankaj Sarda, Joint Managing Director. Thank you, and over to you, sir.
Thanks a lot. Good morning, everyone. I extend a very warm welcome to all of you to the Q2 FY21 earnings conference call of SARDA Energy and Minerals Limited. Our press release and investor presentation containing details of performance has been uploaded. Today's discussions may include some forward-looking statements which must be considered in conjunction with the risks that industry in general and our business in particular face, and actual results may vary materially. COVID-19 impact. With gradual unlocking, economic activities have geared up, but the resurface of coronavirus has also intensified regionally, forcing administration to impose localized restrictions. Still, the economic recovery is faster than expected, and impact of COVID-19 is diluted to a great extent. RBI has projected current year GDP to contract by 9.5% with positive growth to be achieved in last quarter of the FY. During the quarter, all our manufacturing facilities operated near normal capacity. The company has got sufficient liquidity to meet its obligations and to face the challenges evolving from resurge of COVID. Our external credit rating is reaffirmed by CRISIL at A+, which reflects that the company is well positioned to face the challenges posed by COVID. Our subsidiary Chhattisgarh Hydro LLP, which had availed COVID moratorium, has prepaid the moratorium amount in current quarter. Its rating was also upgraded from ICRA BBB to BBB+. I request Shri Manish Sarda ji to brief about global and domestic scenario of steel and ferroalloys.
Thank you, Pankaj. Global steel production was marginally up year on year and 7.8% quarter on quarter on base effect. China recorded growth of 10% year on year and 4.42% quarter on quarter, constituting more than 60% of global steel production. Ex-China production saw a degrowth of 10.1% year on year and growth of 13.31% quarter on quarter. India's domestic crude steel production during quarter 2 FY21 was 26 million tons against 27.12 million tons in quarter FY20 and 16.29 million metric tons in quarter 1 FY21, registering a degrowth of 3.76% year on year and growth of 33.6% quarter on quarter. Finished steel consumption fell from 26.22 million metric tons to 23.63 million metric tons year on year. Export of steel during current half year has more than doubled from 5.03 million metric tons to 10.98 million metric tons, and imports half from 5 million metric tons to 2.11 million metric tons over corresponding period of previous year.
Sir, sorry to interrupt. Manish sir, your audio is not very clear. If you could speak a little louder, please.
The government has announced various steps to boost the liquidity, demand and credit flow in the economy, which will have a positive impact on demand of steel in the medium term. Sustained export growth will also help improved capacity utilization and stability of prices. Supply constraints of iron ore due to COVID at global level and auction of mines at domestic level have resulted in demand-supply mismatch and kept prices of iron ore and pellet at higher levels. The miners have been increasing iron ore prices regularly since May 2020. During the quarter, production in our plants was near normal. The pellet plant was under scheduled maintenance shutdown for 17 days during the quarter. At Raipur, one ferroalloys furnace was under shutdown for refurbishing and operationalized in the last week of September. Another furnace has been shut for refurbishing. As such, effectively, 4 out of 5 furnaces will be available during the current year. Our power unit was also under shutdown for repairing and from 6th July 2020, which has been restored on 22nd October 2020. The shortfall of power was met by importing power from our subsidiary at Vizag, which has got surplus power capacity. This caused extra transmission costs but helped in maintaining production levels near normal. This had some bearing on production of steel. Details of production, sales, and realization of products have been provided in press release and presentation shared in public domain. The permission for increase in production capacity of pellet plant from 600,000 tons to 800,000 tons is expected by January 2021. Ferroalloys. The ferroalloys prices remain stable during the quarter. Ferroalloys exports have seen falling trend in quarter after peaking in June. During the quarter, the country exported 400,000 tons of ferroalloys against 364,000 tons in June quarter. Prices of manganese ore remained volatile during first half of current year. With the fall of prices in manganese ore, the prices of ferroalloys also have seen softening in recent times. SARDA metals. Prices of steel products remained elevated on the back of global shortage of iron ore. In India, also production from mines in Odisha were adversely affected due to rainy season and delay in transition of mines to new allottees. Supply is expected to improve from next quarter. Prices of iron ore pellets also remain firm due to export demand and higher price of iron ore. Margin on downstream long products remains stressed due to poor offtake for infrastructure projects. Old mine owners were granted one more month up to October for removing their stacks from the mines. They have requested for one more extension. SAIL has also auctioned substantial quantity of iron ore fines. This has eased pressure on supply of iron ore. Newly auctioned mines in Odisha have also started production and ramping up their production. Mr. P.K. Jain will now brief the financial performance and position of the company.
Thanks, Maniji. The company has reported consolidated operating income of 548 crores during quarter as against rupees 347 crores in the previous quarter and rupees 550 crores in the corresponding quarter of the previous year. The company has reported EBITDA of rupees 154 crores during the quarter against rupees 98 crores in quarter 2 of previous year. Profit after tax at consolidated level stood at rupees 84 crores as against rupees 68 crores in the corresponding period of the previous year and rupees 36 crores in the quarter ended June 2020, resulting into EPS of rupees 23.41 per share. Hydropower. Better monsoon helped in achieving better capacity utilization in hydropower generation during the quarter. During the quarter, we generated and sold 65.23 million units against 49.65 million units in quarter 2 of previous year, recording a growth of 31.37 year on year. Debt position. At the standalone level, the company is net debt-free company. In operating companies, the long-term borrowing stood at approximate 650 crores and total borrowing at about rupees 760 crores. As on 30th September, bank balance and liquid investments stood at approximate rupees 300 crores. Term debt, net cash and current investment stood at about rupees 1350 crores. Loans repayable within next 1 year is rupees 78 crores. The debt equity ratio is well below 1. All obligations have been met on time. Bank interest rates are falling on the back of ample liquidity. Effect of this will be reflected on reset. The company has refinanced one of its term loans with saving of more than 2% per annum. Environment is conducive for renegotiation of terms or refinancing of the existing loans. Sri Pankaj Sada will brief about Sikkim Hydropower Project, ongoing coal mine auction and industry outlook.
Sikkim Hydropower Project. As explained in the last con call, the project is in final leg of its completion. Heavy rains washed away Siliguri-Rangpo highway and also affected work at site of contractor. Heavy landslide has also affected work at site. Although we are putting best efforts to start generation by end of this quarter, this may cause delay of 15-20 days. Coal mine auction. The central government has auctioned 19 coal mines for commercial mining. We also participated in the auction process. We are highest bidder for Shahpur West underground coal mine in Madhya Pradesh and Gare Palma 4x7 coal mine in Chhattisgarh. Gare Palma 4/7 was previously owned and operated by us prior to cancellation of all mines by the Supreme Court. The company is entitled to 20% rebate on coal to be consumed in gasification. Both the mines are at a distance of less than 300 kilometers from a manufacturing facility in Rajasthan. This will provide long-term security and consistent quality of one important raw material, coal, to the company at reasonable price and provide hedge against price fluctuation. Outlook. India is expected to record positive GDP growth in Q4 FY21 with overall contraction of 10% for the whole FY. Increased export demand has balanced demand supply in the steel sector, enabling stable capacity utilization and improved pricing. Good monsoon, better condition in rural and semi-urban India, and government stimulus backed by focus on self-reliance and infrastructure creation should push the demand further. On global supply concerns, price of iron ore is expected to remain firm. Since the company is sourcing part of its requirement from captive mine, high price of iron ore is positive for the company. Various state governments and central governments are also taking policy initiatives to incentivize fresh capital investments by the industry. Because of low leveraging, the company is well placed to take advantage of emerging opportunities. Commissioning of Sikkim hydropower project will further improve the financial performance of the company. We expect credit rating upgrade and further interest rate reductions on completion of the Sikkim hydropower project. This is all about the performance and outlook. Now we leave the house open for questions from the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubham Agrawal from Equitas. Please go ahead.
Yeah. Good afternoon, gentlemen. My first question is regarding iron ore prices. Actually, the voice was not very clear when you were updating about iron ore. So I understand that you said that prices will remain firm in the next quarter also. So can you just elaborate on that?
Yes, the prices of iron ore expects to be firm because so many Odisha mines which were auctioned has not yet started, and prior allottees have still one more month. They were taking out the fines and material till October end. So assuming that the new owners will start taking over the mines and will start operations in the mines, there will be a shortage of lumps and fines iron ore in the coming 3 to 4 months, or maybe 6 months.
Apart from this, the international prices of iron ore is also pretty strong because the demand from China is also very huge.
So, and in the existing iron ore mines, so there are some inventory which is still pending, which is expected to be off-taken. So what is the total amount of inventory, and will this reduce iron ore prices in India at least?
I'm sorry, can you repeat again?
So in the existing iron ore, there are few inventories left, which is expected to be off-taken. So once this is allowed, do you expect the iron ore price to go down? And what is the total inventory that is lying there in the mines, if you have any idea?
No, you're talking about Odisha mines?
Yeah.
So in the Odisha mines, I mean the government is not giving extra permission to the past owners of the mines to take out the material.
Okay.
So they are not allowing it as far as I know about it, and the new owners will come into picture now, and they will resume operations, and they have to buy their heavy machinery, equipment, etc., and they will be starting their mines very soon.
And since the premium quoted is very high, that will not allow the iron ore prices to go down.
Okay. Okay. Sir, and secondly, my question is regarding Sikkim. So in the presentation, it is mentioned that it is likely to start in December 20, but in the call just now, you said that 15-20 days, it may be delayed further. So can we, so this can be expected in mid of Q4, am I right?
No, well before that, maybe somewhere in January latest. We are trying to complete by December, but there may be some delay, so I think in January we should be able to start.
Okay. Sir, and
we are still trying so as to complete by December end, but there may be delay for few days.
Okay. And with regards to the refinancing, you said that the interest cost has lowered by 2%. So what total amount on which this has been lowered?
I think it was somewhere about 50-60 crore amount. That is only a small loan amount we have refinanced.
Okay. So rest of it will go lower once the Sikkim starts.
Yeah, major reduction will come only after commissioning of the Sikkim power project.
Okay. And sir, my question regarding...
There are certain reset also due, which will also have bearing on our interest.
Okay. Got it. And sir, regarding the ferroalloy business, so this quarter, the margin was substantially lower compared to the last quarter. What was the reason you would attribute this to? So if I see EBIT margin was 8.6% compared to 18.3% in last quarter.
Yeah. The prices of sponge ferroalloy has gone down, and one was the inventory loss because of the reduction in the prices that also affected margins. So to some extent it was contribution of the inventory loss, and to some extent it was basically fall in the prices.
Sorry, can you come again?
There are two contributing factors in ferroalloy EBITDA going down. One is the inventory loss because of the fall in the prices.
Okay.
Inventory loss, and another is on account of the falling prices, margins constrained to some extent, and as told, one of our furnaces is also under shutdown.
So going ahead, what can we expect the margins to be? Because given some of the competitors, their margin was still healthy this quarter also.
It also depends how is the cost structure, what is the power cost. There are multiple scenarios which works. As I told, one of the reason has been inventory loss, which may not be there, so that will definitely improve our ferroalloy performance from here.
Okay.
Yeah.
Got it. And so in the last pellets shutdown was there, and the power plant also was shut down till 22nd October. Do we expect any more shutdown in the current year, or all is done except the ferroalloy?
Except ferroalloy, all is done.
Okay. And regarding this Chhattisgarh 25 megawatt hydropower project for which land has been acquired, so what is the current status, further investment there?
We have not yet started work on the project, but I think soon we will start work on that project. Maybe within next 6 months, work on the project will be started.
Next 6 months, and what is the total investment expected?
Total investment is about 250 crores over a period of 3.5 years.
Okay, sir. Okay, yeah, that's it from my side.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Rahul Jain from Systematics. Please go ahead.
Yeah, thanks for taking my question. So on steel, what are the trends you're seeing on pricing? Because what I see on a Q1Q, our prices are not like very robust. So I'm just wondering, is there more price increases to come from here?
The overall pricing of steel, I think, will remain more or less stable and firm, because we are seeing the reopening also of the economy now in terms of COVID, and a lot of government projects which were stuck because of labor issues and because of COVID will kickstart in a big way.
Okay.
There will be a lot of pent up demand as well, which has been there. and we have seen imports being very negligible. If you look at the previous year and this year, the government has imposed a lot of curbs in terms of steel imports and is focusing more on made in India. So effectively, I think the steel prices will be stable and firm for the coming 6 months.
So currently, by how much they would be higher compared to our 2Q average? Are they similar, or they would be like 1,000, 2,000 rupees higher?
No, they have definitely increased in some of the products. They have increased up to 1,700-1,800 rupees.
Right. And sir, could you also elaborate on your coal mines, which we are emerged as the highest bidders? So essentially, where do you intend to use it for merchant sale or for in your steel plant, and how long will it take to get them started?
I mean, hi. Regarding the coal mine, that's the best part about it. It's a complete merchant mine. So whenever, if we see that the low grade of material is coming out of the seams, we can sell it locally. Only high grade we could get to our plant. So that's the beauty about it. So regarding the Chhattisgarh coal mine, we intend to start this mine within 1.5 years. Because all the permissions and clearances, because everything is clear and it was earlier with us, so we have complete idea about it. So we feel that we should be able to start it within 1 year. The Chhattisgarh.
You think you will come to your the rated capacity within 1.5 years? Is that right?
So 1 year, within 1 year, we'll be able to start the mine, and within next 1 year, we'll try to reach to the rated capacity.
And so how does it work? You have this.
The best part about this mine is this mine was operated and owned by us only. So we have the land in place, we have our labor, in place. We know the mines in and out. And apart from that, our whole perspective of this restarting of this mine would be to get the best quality coal to our plants for application of this coal into sponge, pellet, ferroalloys, and whatever best we can do in terms of the logistics per GCV basis. We'll be trying to do that, because now, since it's a commercial mine, we are also allowed to sell the coal at the pit head to other power plants, and there are a number of power plants which are there near our coal mines. So there we can sell that coal easily.
And how does the system work? So you have a revenue share of, say, I think in one is 26, another is 66.8. So but whatever is the relevant Coal India price of that particular grade, you have to share that percentage with the ministry.
So if you see, the earlier bidder, Monet, had bidded this at 2,600 rupees per ton.
Right. Over and above that is the over and above the royalty and everything, right?
Over and above the royalty, over and above the royalty. That's how they went up to. Whereas the 66.75% will be much below 1,000 rupees.
So the equivalent grade is what, 1,000 rupees for GC? This is which grade? This is G10 or?
This is the open cast mining has an overall grade of around G11.
G11, okay.
Right.
So typically around say 600 rupees is roughly you will have to share in that. That is the rough number.
800 to 900 rupees.
Yeah.
800 to 900, right.
Yeah.
Even and what is the cost of mining you expect? Around 500 rupees, or?
So it shouldn't go beyond that.
Yes.
Right. So that's what. Yeah. Thanks for taking my question. Yeah, thanks.
All right.
Thank you. Anyone who wishes to ask a question may press star and one now. The next question is from the line of Abhishek Maheshwari, an individual investor. Please go ahead.
Hi, sir. Thank you for taking my question. And, sir, I have just two basic questions. Sir, are we exporting our steel also or only ferroalloys?
No, we are not exporting our steel. We only export our ferroalloys. Steel is sold locally and domestically we sell it in India.
Okay. And so secondly, in like certain places in Maharashtra, like Mumbai and all, we are seeing realizations crossing 40,000. So in Raipur also that's the case, or are we still seeing 35 to 37,000 realizations?
No, the case in Bombay is totally separate because you have to understand that in Bombay, mostly the steel is sold by the traders, and the traders have their credit margins and all. So there is a long, because it's mostly for the real estate sector and the infrastructure sector in Bombay, the long products, and there is a big payment delay in terms of 30 days and 60 days depending upon the customer. So the pricing is more or less 37, 38, but they add their own margins for financings.
Okay,
And
so
the storage and the warehousing storaging cost is very high in Bombay.
okay, fair enough. So your realizations are somewhere around 38,000 only.
It will
HB
depend
wise, I'm
on the
talking
product. No?
about. HB wise, I'm talking about.
For HB wire,
I mean wire rod and HB wire, somewhere around 35 to 38,000 only as well.
Yes.
37,000.
Okay, okay, thank you. That's it.
Thank you. The next question is from the line of Vikas Singh from Phillip Capital. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, my first question pertains to your hydropower project of Sikkim. So, any update on the rates which could be fixed, or what kind of utilization of the PLF we can take this plant in 1 year's time?
No. Presently is the lean season. So in the rainy season we get the full. In the first year itself we will reach the normal capacity utilization level.
That is roughly around
45%.
50% around. In the first year itself.
annualized basis.
In the first full year of operation. In the next season we will
Okay.
set a rated capacity. But since we will be starting in the lean season, so initially we will be starting only with the 1 unit because presently power will be on the low flow.
Okay. And any word on the provisional rates as of now?
Provisional?
Provisional rates at which we would be able to sell?
No, not yet. We have not yet got the order, but as I told ki provisional, the rates for a smaller hydropower project up to 25 megawatt is 6 rupees plus. I think we should be getting the same provisional rate. We have not yet got the provisional rate approved.
Understood. So my second question pertains to assuming that your second hydropower project starts, but we have couple of more smaller hydropower projects. One you have mentioned 250 crore plus upgradation in the ferro alloy unit as well. So how do you see that the capex and the cash flows in next couple of years and overall the debt correction because of that?
No, as far as the Sikkim hydropower project, their capital outflow will stop. So far as this Chhattisgarh hydropower project, whatever expansion we are going, whatever internal promoter contribution is required, that project, existing project will support that. No problem. The Chhattisgarh hydro existing project is generating sufficient surplus cash flow after meeting its debt obligation. So that will be financed independently. That won't require any equity contribution or support from the promoter company.
No, so let me rephrase it in a different manner. So what I wanted to understand that we have almost 250 crore in Chhattisgarh. If I get it correctly, then around 100 crore in this ferro alloy kind of the capex. And we have the normal maintenance capex also going on for the next 2 or 3 years.
Yeah.
So just wanted to understand that the total capex which we are going to put in versus the cash inflows which we could, foretold beforehand from the Sikkim power project. So how the overall debt position would be, as per your calculation, would be there in let's say next couple of years down the line?
No, the debt position should remain more or less at the existing level. There may be some plus or there may be some minus, but there won't be material impact because there will be some additional capex and there will be some repayments. So it should remain within this range based on the existing planned capexes.
Okay, so it's safer to assume that whatever the incremental cash flows are coming, we are putting it in the further growth project. So that would remain more or less at 1350 for next couple of years.
Yeah.
Is that right assumption?
Our existing gross loan is about 1650 crores, maybe 1600 crores, gross loan. All the 300 crores we are holding on in cash. So if we are going with the coal mines also, we are going all those things, so maybe in the range of this 1600 crores, loans will remain. So there won't be material addition, there won't be material reduction.
Understood. So my second question pertains to our coal mines. So this 1.8 million ton of total annualized production which we have won in both the mines combined. So would that be able to suffice the entire coal requirement, or what portion would be available for us to sell in the merchant market?
It will depend upon the pricing. It will depend upon the pricing what we get in the merchant markets. But our whole efforts will be to first see and effectively use our own coal and cut down on our imports in a big way, so that we are self-sufficient and we are away from fluctuations of the international market and the dollar movements.
Apart from this, we have a requirement of almost 1 million ton in our Siltara plant, Raipur. So over and above, we can always sell merchantly outside to the third party, and over and above, the MOEF gives us the clearance of increase our capacity by around 50%. So 1.8 million ton we can achieve if we want to increase our capacities without any MOEF clearance. We can go above 1.8 to 0.9 million ton more.
Understood. Sir, if I get it correctly, that there is some 65% kind of the production performance guarantees with most of these coal mines which are getting auctioned. But within 1 year. But you are saying that the next 1.5 year only you would be able to start. So if you could just elaborate that what happens to that performance guarantee part of it?
No. It's basically this, that once the government gives you all the clearances in place, within the stipulated period of time, you have to start your production and have to achieve 65% of your production. It's not within the 1 year from the date of allocation.
Once the government gives us the vesting order, we have 51 months to start the mine.
Understood, sir. And just one last question, if I may squeeze in. What is the current rate of the same grade of coal which you are getting at your plant, or what is the landed cost currently?
There are multiple grades. We are using different grades for power, there are multiple grades. So it's not a grade.
So power grade you can say whatever we are using for our power plant. So what is the rate at which we are getting at the plant right now?
We are getting around 1 rupee 15 paisa per GCV around.
Okay, sir. That's answered my question. Thank you, sir, and all the best for future.
Thank you.
Thank you. The next question is from the line of Parthiv Shah, an individual investor. Please go ahead.
Thank you, sir, for taking my question. And firstly, congratulations for a very decent set of numbers. Sir, my first question is regarding your interest cost. So probably I'm assuming that you would be capitalizing a lot of your interest costs at this juncture. That is why your interest cost comes to at around 5.2%. I just want to understand, once we are servicing the normalized rate of interest for our loans, which you just discussed about 1,500 to 600 crore, and after the interest reduction, everything, what sort of annualized interest costs are we looking at this company on a consolidated level?
If you consider that way, on average, even if you consider 10% on average, then effectively 150 crores is the total interest component. And definitely there are interest incomes also, because as I told you, we are holding 300 crores of the cash and bank balances. In addition to that, we have certain loans, etc. So ultimately, my effective borrowing cost will be somewhere about maybe 1100 crores or 1200 crores, whatever we are incurring, even after commissioning of the Sikkim hydropower project. So in net cost, if you consider, it will not exceed maybe 110 crores, 120 crores. Even after
which is against 82 crores which we are having right now, right?
Yeah.
Fair enough. Sir, I just want to understand, somehow there seems to be some sort of delay in the additional capacity commissioning of our pellet plant. What is the reason for such a long delay? Because I think this plan to add 2 lakh tons was since long, but we are not being able to take advantage of the current pellet price rally.
Yeah, there have been changes in the government policies. In between, NGT had come out with a different guideline. So there are multiple changes in the government policy. Then NGT, because Raipur, as you are aware of, it is in the basically critically polluted cities. So there are multiple agencies which are involved, and time to time there have been changes in the policies which has affected this.
The delay is also because of this COVID pandemic, which has been ongoing for the last 7-8 months, and the government offices have also not been working in that way, which is the normal way of working, and NGT also came into play. So all of this is added to that delay. From our side, there is no delay. It's basically the government policies that have to be cleared up, with respect to Chhattisgarh and Raipur specifically as a zone.
Fair enough, sir. Sir, I also see that this quarter our pellet realization was somewhere around 6,110. So, I mean, is it less as compared to some of the peers, or how it has panned out? And also, I would like to know, now that our plant operation maintenance is over, now we'll be running at full rated capacity. So, in this quarter, at what rates are we booking the pellets at? I'm assuming that will be a huge turnaround from this quarter, right?
Yeah, actually, last quarter, because of shutdown, during the price increase, we could not take advantage of that increase because prices had moved from 5,800 to 8,000. So there were pipeline orders also, and then shutdown. That definitely affected our average realization of the pellet plant, which is less than market average realization because of the shutdown and pipeline orders. And this quarter definitely it will be plus 8,000. It should be.
So what volume we are targeting in quarter 3, and 8,000 you are expecting the ballpark number, right?
Yeah, ballpark number. Just I think on average what we are selling is more than a lakh ton of the pellet we sell in the market every quarter. Sometimes in some quarter it may be less, some quarter it may be more. On average, about 4 lakh tons we sell off in the year.
Okay. And sir, last question regarding the iron ore scenario, and also for our company, where we have our own mine, but we are also buying from the market. So what is the percentage of our source that we are buying from the market, and what is the current landed cost of that? So I just want to understand two things. One is the blended cost of our ore fines for the pellet plant, and also at what rate is the current landed cost. And also talking about the iron ore scenario, Mr. Sarda very nicely explained that it could be a phenomena of a huge supply shortage for the next 3 to 6 months. What is the possibility that it can last for 6 months? Because if it lasts for 6 months, and also hearing commentary from very big steel manufacturers like JSW, the scenario looks very bad in terms of the supply. So this will really hurt production going ahead. What is your sense, overall commentary on this?
So as far as shortage is concerned, I would say that we also expect that the shortage will be there for the coming 4 months, or maybe it will extend to 6 months or 7 months. But at the end of the day, there will be some kind of solace in terms of imports, because if the shortage goes on for a very long period of time, we will see a robust pricing of iron ore. The pricing may go up, and that will make it viable for imports, at least for the coastal-based plants. The plants which are based on the coastline, they will be able to import, iron ore. And I think last 2 to 7 months, because I guess all the guys who have invested in these mines would be also wanting to restart and wanting to consume the iron ore. Nobody is interested. No company would be interested to import iron ore in the country.
Right. And so for us, the landed cost of fines for our pellet manufacturing, and what percentage are we using, and what is the blended cost?
We are using around 50 to 60%. We are blending, and our captive iron ore we are using around 40 to 45%. The landed cost of, there are various grades of iron ore fines that is available. So around 62.5 plus grade material from Odisha is coming around 5,500 to 5,800 rupees at the moment.
Okay. But you are getting the supply for manufacturing use in your pellet?
We are getting the supply, but the but availability is going down and down in coming months. The prices are going high. You have seen that NMDC also increased their prices by almost 150 to 200 rupees a couple of days back. So the rates are going up.
But we have sufficient backup so as to maintain the pace of our production. It won't affect. We have sufficient
It won't hinder the production, right?
Yeah.
Okay. Fantastic, sir. Thank you so much. That answers all my questions. Good luck.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. We would request the participants to please press star and one to ask a question. The next question is from the line of Amit Jain, an individual investor. Please go ahead.
Yeah, good afternoon, sirs, and congratulations for navigating this tough environment and coming up with good set of operational performance. My question is again related to some of the point that was discussed in the last question, which was about the pellet prices. If I hear it rightly, so the price realization for the last quarter was approximately 6,100 rupees per metric ton, and though ongoing prices, I understand, is more than 9,000 per metric ton, but I understand considering the various constraints, the expected realization for the ongoing quarter can be upwards of 8,000 rupees per metric ton, which is approximately 33% increase. Is that right, Abhishek?
Yeah, you have correctly understood. It would be 8,000 plus what we have said.
Yeah.
Because there are pipeline orders, all those things, so we have to take average and how the prices, how long this price continues, 9,000 plus, all depends. So, yeah, considering that on average, it will be more than that only. To what extent it goes up, it's very difficult to predict. Correct.
Yeah, and as well as the iron ore prices, when we check on the China stock exchange, which is Dalian stock exchange, that is also touching multi-year high. So with greater probability and more certainty, you can probably, your commentary is based on that we will be able to definitely realize more than 8,000 rupees per month.
Yeah, definitely we'll realize more than that.
Fantastic. Okay, thank you. That's all from my side. Thank you so much.
Thank you. We would request the participants to please press star and one to ask a question. The next question is from the line of Shubham Agrawal from Equitas. Please go ahead.
Yeah, thank you again, sir. Sir, my last question is regarding this coal mine again. So what is the total upfront payment required for both this coal mine?
For this coal mine of Madhya Pradesh, it is somewhere about 34 crores, and for this Chhattisgarh coal mine, it is 86 crores. But it is payable in 4 installments, depending upon the progress. For this Madhya Pradesh coal mine, we'll get almost from today, you can consider 4.5 years in the installments. Okay. And for Chhattisgarh also it will depend. It is payable in 4 installments, one on the agreement, another on the mining lease, then mine opening, and then after production. And that is also immediately refundable against the revenue share. 50% of the revenue share will be adjusted against the upfront payment. So as the mine starts, immediately we'll start to get back the amount.
Okay, got it. And sir, regarding this MP coal mine, what would be the total investment required over this next 4 years to get the mine started?
I think in the initial 2 years, there will be hardly negligible amount. It won't be materially. Major capex will be only in the last 2 years.
Okay.
2.5, 3 years, whatever it takes. So initial 2 years, there will be very low, but total investment will be 200 crore plus minus.
200 crores. Okay. And any investment for Gare Palma coal mine over the next 1 year?
There won't be material except this upfront payment will also go in the installments, and there will be some on the mining lease execution, etc. Because land is already in possession. It was operating mine. So maybe about, I think we have to give maybe 25-30 crores to the existing prior LOT, and there will be some restarting capexes.
Okay. And lastly, regarding the ferroalloy expansion, so when do we think we'll start working on this 125 crore expansion?
Yeah, I think next financial year we'll start work on this.
Okay, next year. Yes, sir. That's it from my side. Thank you again.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Sachit Kera from Smart Equity. Please go ahead.
Yeah, good afternoon, sir. Am I audible?
Yeah, you are audible. Good afternoon.
Sir, sorry, I'm new to your company, so pardon me if the questions are a bit naive. In regarding the Sikkim Hydro project, you mentioned that the first unit would get commissioned by January latest, right?
Yes. Yeah.
Okay, and what about the remaining units, sir?
It will depend on availability of water. Na? The plant can run only at full load only during rainy season. It does not run throughout the year.
Makes sense.
This is run of the river project. So the full capacity or both the units will be running only during the rainy season, not throughout the year.
Makes sense. And you don't envisage any problems in being able to sell as much as you produce, correct?
No, we have already entered into PPA with the distribution utility.
Okay.
So there is no problem of sale.
Yeah, it's just that the rate would be finalized a bit later.
Yeah, rate would be finalized.
Okay, makes sense. The second question is regarding the mines. When you bid for the mines, sir, this is again a broader question. How do you sort of calculate, the kind of payback or IRR while bidding for the mines?
Yeah, so it is directly linked with our landed cost and basically production cost. What is my landed cost and what is my production cost? Depending on that, we arrive at the formula. Definitely, one is raw material security, another is saving based on the investment and risk taken.
Okay. So, for example, Gare Palma, the agreement to part with, let's say, 66%, is based on the decision that the upfront payment is less and that it's a running mine, for example.
Upfront amount will be recovered within a year or two.
Got it.
Upfront is only a temporary advance or deposit, you can say. That is not a basically cost. But I am paying upfront, that will I get back refund maybe in a year or two at the best.
Makes sense. And the 66% is on a base of 2600 you mentioned?
No. It will be basically, it's a 66% is of the value average cost national coal index is declared for every grade by the government. Yeah. Depending upon there is a basket of the import, auction, linkage. So they will arrive at a pricing for every grade of the coal based on the exact outflow of the coal from the mine. We have to pay on price of that grade.
And this varies every month, or how does it?
Yeah, it will vary depending upon the quality of output from the mine.
And the index also varies every month.
Okay, makes sense. And this is on the gross value, right? There's no floor plus concept. It's on whatever the index value is declared. Flat 66% will be shared with the government.
Yeah.
Okay. And will the mining cost be deducted, or that would be coming out of your 33% share, 34% share?
That will be coming out of our 33% share.
Okay. And including the freight and the transportation cost, everything is yours only?
Yes. Everything is ours.
Got it. Okay. Great, sir. I think that's all from my side. Thank you.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Amit Jain, an individual investor. Please go ahead.
Yeah. So this is in continuation to my previous question. I realized that it will be better if I get some clarification here. According to the press release, last Q1 FY21, the company produced approximately 144 metric ton of the pellets, and the sales were approximately 77 metric ton of the pellets. So does it mean that there is an inventory of approximately 70 metric ton available with the company, because the production in Q2 and the sales number is approximately the same, which is approximately 140 plus metric ton?
No. It is not like that. Basically, rest of the stock is consumed captively for production of sponge iron.
Oh, okay.
That is also mentioned in the notes in the press release. If you see, part of the production is captively consumed at every stage. Part of the sponge iron is also consumed in the production of billet. Part of the billet is consumed in the wire rod. Then like that.
Okay.
So it is not the inventory built up. It is only there is no inventory built up. Our inventories are at low level.
Okay. And second question is that the 33% increase realization that we are expecting for this quarter in the pellet prices, that will directly add to the bottom line, because most of the consumption of the raw material for the pellet production is our captive, correct?
No, as we told, around 40 to 50% is our captive, remaining is market purchases.
Okay. Okay. Thank you. Thank you so much.
Thank you. We would request the participants to please press star and 1 to ask a question. Anyone who wishes to ask a question may press star and 1 now. As there are no further questions, I would now like to hand the conference over to Mr. Pankaj Sarda for closing comments.
Thanks to all the participants for joining this conference call. We hope we have clarified the questions to the satisfaction of the concerned investor. If anyone has any doubt, they can always approach to our investor relations team, which is also provided in our invitation as well as presentation. Thanks to all.
Thank you. On behalf of SARDA Energy and Minerals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.